My name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. I am welcomed today by my friend and colleague, Anthony Sandler. Thank you so much for joining me, Anthony.
Thanks for having me, Anna.
We haven't had you online in a little while, so I'm so excited to welcome you back to the CSE online world that we live in. You're joining us today as part of our special forum for PreDAC. So I'll tell you a little bit about PreDAC before we jump into who Anthony is and why he's sitting at the table with me today. We initiated a forum called PreDAC a few years back, and it gave us a chance to all get together before the big show of PDAC every year that happens in March in Toronto. Be able to talk to some letter writers, some investment advisors like Anthony, find out what's happening in the market, see what's going on before we all jump into the big conference. Unfortunately, this year we are all still stuck in our basements and still living in this online forum. So we wanted to keep moving forward with it and make sure that we're still getting all those amazing insights, because needless to say, we've been sitting in our basements. The markets have been unbelievable this year, wouldn't you say, Anthony?
Oh, yeah.
Okay, so there's so many things I want to ask you, and thank you again for joining me. This is Anthony Sandler. He's an investment advisor with the Barber Group at Mackie Research. Anthony, tell us about your practice and about the Barber Group.
Sure. Well, we're with Mackie Research, which is a full-service investment dealer with offices across Canada. It's an independent firm that's been around in one form or another for 100 years this year. So we're celebrating our centennial. The Barber Group is a team in the Vancouver branch of Mackie Research. We have, I guess, two streams of business. One is in the small cap space. We have a book of clients who like to invest in private placements, late stage private, early stage public companies. And we also offer long-term financial management, portfolio construction, and financial planning.
Amazing. One thing, actually, right off the bat, I'm going to ask you, just for maybe some of our audience that doesn't know, I'm sure most people do, especially in the mining sector, what is a private placement?
So a private placement is when a company, it could be any kind of company, either private or public, raises capital without enlisting the services of an investment dealer or a merchant bank. So they might use a marketing firm, but typically they're going out and they're calling brokers and they're calling their contacts to raise money and sell shares privately. To get around the rules requiring a prospectus, the private placement requires a subscription agreement and it requires accreditation. So the investors have to be accredited investors or friends and family of the issuer.
So accredited investors, there's a few different boxes that you can check off, and those typically are to do with the assets that you hold individually as a household or annual income. Is that right?
Yeah, the IROC tends to believe that if you have a certain amount of income or a certain amount of assets, that you're sophisticated enough to take the extra risk that comes with doing a private placement. The risk is in the form of, without a prospectus, without audited financials, for example, that there's less transparency around the deal. So they think if you're wealthy or if you're successful, that you can take on that risk. So I mean, I can go through the categories, but you can always talk to your investment advisor to find out if you are. Typically, there's a threshold of income or family net worth, and then there's a whole bunch of other categories for people who are in the industry or used to be in the industry, etc.
So the one thing I will, because I want to ask you one further thing about that, the one thing that is the preface of this conversation today as part of PDAC is we're just going to talk in general about investing in the mining space. I think that, I always suggest to people that if they want to invest in the sector, which is a bit more speculative and it has more risk attached to it, that they come to professionals such as yourself at the Barber Group. And if anyone's interested in having an introduction to Anthony, feel free to reach out to me. I'm sure his information and his colleagues' information are on the website. But if you want to be out there doing it on your own, obviously we've seen the surge in the discount brokerage industry. It's important to understand some really unique elements of investing in the mining space. So that's kind of why we're having this dialogue. But again, in the riskier stuff, make sure that you're reaching out to a professional. You guys look at this stuff all day long, every day, so you know what you're talking about. One of the reasons that we see so many private placements, I think, in the mining space is because typically what will happen is they go and they do a drill program, they raise capital for the drill program, they execute the drill program, and once that's done and they can analyze the results, they go out and build a new drill program. And so it's typically a little bit faster when you say to go to market with just another private placement, raise that next stage of equity.
It's a combination of a few factors. The mining investment sector in Canada is very tight knit. So there is the ease of being able to find investors. There's some big institutional investors who you can bring in on a private placement, your Sprots, your Dundees. So that's one, is that you don't necessarily need the broker's institutional and retail network, which you do in marketed and bought deals. Two is you save money. I mean, it's you pay a lawyer to do the paperwork, but you're not paying an investment bank a larger fee. Although there's still finder's fees involved, but if you can bring a lot of the money without going through any kind of investment advisor, then you take more of what more of what you raise gets put into the ground, as we say. And then definitely, yeah, speed, getting it done without the exchange being involved can make these a little faster to open and close.
And that's another thing that's interesting about the private placements that happen is that not that it's completely impossible if you're doing it on your own, but typically I know your group is incredibly active in private placements within the sector. So if you are dealing with an actual broker, typically you get more access to the ones that are coming to market, wouldn't you say?
Certainly. I mean, you'll hear about deals and you'll call to find out if you can be involved, and they'll already be closed. I mean, sometimes all of the funds are lined up before the placement is even press released. Now there are brokered private placements as well. I shouldn't gloss over that. There are times where the company will see an advantage in working with an investment dealer or a specific investment advisor. But sorry, lost my train of thought.
Talking about just the access that brokers have.
Typically, investment advisors will have that network already built out. So if you're working with an investment advisor, you might hear about these deals. But it's important to note that these are, if they're non-brokered, they are usually client-centered, so client-driven. The clients will come to us with them, but the connections that we have in the mining industry and with the issuers are really helpful to, get to know what's available and who's out there raising money.
Absolutely. The other thing I want to touch on private placements before we move along, because there's something a bit unique to them, is sweeteners. Can you talk about maybe some of the sweeteners that are typically added to private placements and the opportunity that gives the investor?
The most common would be a warrant. Of course, when you do a private placement, often there'll be units. So a unit will usually be comprised of one common share and either a half or a full warrant. And the warrant is, a way to get exposure to a company and their success without actually having to put money down in advance beyond the common shares. So, there's people who will what we call clip the warrant, and they'll buy the units, sell the shares, and then wait to exercise the warrant. So if the company does really well, they'll still have that exposure. That would be, to me, the main sweetener that we're looking for. But there's also typically in the public companies a discount. So if a stock has been trading in the 50 to 60 cent range, for example, maybe they'll bring out the deal at 45 cents or 40 cents, and you're able to buy cheaper than you would be if you were to buy it in the market.
Oh, that's a really good point as well, is typically the private placements are offered at a discount to market, which is, again, another opportunity that they hold. Of course, there's also the opportunity to buy directly on the market. One thing that I don't know if people are fully aware of, but when you invest, when a company does a financing, whether it's a private placement or via prospectus, that capital goes right into the operations of the company. When you buy on the market, you're just buying from the seller. You're not putting money into the treasury of the company. And I don't know if everyone really understands that. So it's such a great opportunity, especially in the mining space, to invest directly in the company, because you're literally putting, your capital into the next drill program and the next opportunity, which is so exciting. Speaking about investing specifically in the mining sector, there's a few unique opportunities within the mining space. Can you talk to us about, people might have heard the term flow through capital or flow through shares. Can you talk to us about what that is?
Sure. It goes back a long way in Canada, but in order to encourage mining exploration, which is very high risk, very high reward, hopefully, they created some tax incentives for mining companies. So a mining company can write off a certain portion of their exploration fees, so lower their tax bill, and a certain portion of their development costs when they've actually, going into development and they have to build the mine. mining companies to entice investors to give them capital can actually renounce those tax advantages to their investors through the flow-through share program. So if you buy a flow-through share, for example, you can get you'll get a tax receipt from the company at the end of the year, and they will pass on the tax savings to you. So there'll be non-refundable tax credits of 15%, 100% of their exploration and Canadian mining activity can be passed off as a 15% non-refundable tax credit. 30% of development costs can also be passed on. And there's also opportunity for income tax credits. So those, basically you're getting money off of your tax bill by investing in this company. The trade-off is you will end up with a cost base of zero. So when you do sell those shares, you are taxed at the capital gains rate on the full amount of the proceeds of the sale.
Right. And just to clarify, is flow-through shares, that is specifically when they raise capital and pass down that tax benefit to the investor, that the capital that comes from that type of a financing, that money has to go into an actual drill program. Is that right?
Yeah, either drill program or development, but typically we'll see it going into drill programs. You have to be a Canadian resident to claim it, and it has to be a Canadian mining project. So the actual geological activity has to happen in Canada. I should also point out that 4 provinces, BC, Ontario, Manitoba, and Saskatchewan, also offer a provincial version of the tax credit. So we usually call those super flow-throughs. And I think in BC, for example, it's 20% non-refundable tax credit. So again, that would be a project done in BC and flow-through shares purchased by a BC resident.
Just out of curiosity and putting you on the spot here, so I don't expect you to have any stats with you, but do you think that maybe over the past year we might have seen more flow-through share financings, mainly because people could only travel within certain boundaries because of the global pandemic, and so more projects were happening locally?
It's possible. I think there's probably a lot of reasons why. I think it's primarily the point in the cycle where we are in terms of the early to mid stages of the mining cycle, especially in the precious metals. That would be one. Another would be a focus on good jurisdictions has been kind of a theme of the last year's worth of capital raises that I've seen, where people want to invest in projects in Canada, in the US, and Mexico, places where they know their investment is going to be protected by the government and not at risk for things beyond geological success. So that might put a bit of an emphasis on Canadian projects. And then finally, I think people have been making a lot of money. So there's a lot of big tax bills to lower, and mining executives are pretty clever, and they know when they can raise capital. They know that people have tax bills to offset, so that it's a good time to issue flow through.
You know what, that is a really good point that you bring up. I think there was a lot of wealth created in the markets over the past year. And for those out there that maybe did, build a bit of wealth or had some capital gains in your investment portfolio, that's something to think about, that these are potentially opportunities to reduce that tax bill. Yeah,
absolutely. I mean, I know a lot of very wealthy investors who, January, February, March, they want as much flow through as they can get, and they'll fill up their bucket with it, and they won't do much for the rest of the year. But they don't even care so much if they win or lose on the underlying stock. They want the tax credit, and that's great for the companies because you've got shareholders who maybe aren't as eager to see results. Every shareholder wants to see results, but maybe these ones have already got a little bit of a win in terms of lowering their tax bill.
Totally, and that's just so great for the mining sector in Canada. What a great opportunity all around. That's very cool. The other thing I wanted to touch on is just, I appreciate Anthony puts together a very, very well written email. I think it comes out monthly, does it, Anthony?
Oh, it's more when I feel like it.
It's when you feel like it. Well, maybe you feel like it every month. I feel like it's around monthly that I get to see it.
I'm a little overdue. I think it's been a month and a half since the last email I put out on the general states of the market.
Yeah. So generally, if you're a client of the Barber Group of Anthony's and Rob Barber and the group, then you get to see all the financings they're doing. You get to this wonderful email that you send out. And I know that your brain is obviously meant for this space because the way that you analyze kind of what's happening. So I wanted to go there next and just pick your brain on what you've been seeing in the mining sector. I will preface this with saying that before the pandemic really hit, so I think all of us right now are feeling a little bit of what's the word I'm looking for? A little sad that we're not all together or joining together at PDAC this year, because last year we all entered into PDAC kind of unsure of what was going on with the pandemic. And I think it was about a week later, we kind of shut down as a country. And so it was really the last time that we all got to be together. It was for the big mining conference, PDAC, which attracts approximately 35,000 people in Toronto. And that's just the people that enter the room. That's not even including the people that come to Toronto for that event and do business, inside rooms, which is just so amazing. But as we were entering PDAC last year, I think there was a few things happening. One is that there was a softening of the cannabis space. We were seeing enough financial reporting coming to market or coming to the public that was really showing that some of the cannabis companies didn't have quite the legs that, that the share prices warranted. And so there was a bit of a softening going on there. Some uncertainty in the US probably aided with that as well. And I don't, it's not that the two were connected, but what you actually started to see was a little bit of a change within the mining space. We all went into lockdown, and then from my perspective, and I can't wait to get your insights on this, it seemed like the mining market finally, had its day in the light, which we've been waiting for a long time. So can you just touch on that? What have you seen over the past year in the mining space in general?
Well, the precious metals market actually really started to pick up in late 2019. We started to see gold come off of its lows, which were multi-year lows. There'd been a good strong consolidation in gold price, and we first started to see the metals move, which was moving some of the bigger names, your Newmonts and your Agnico Eagles and your Francos, and then it had yet to kind of filter down to a strong small cap market, and then COVID hit, and obviously margins got called across the world and everything went down, including gold. Coming out of that, though, the expectation that all of the spending that world governments were doing and that low rates would lead to a period of strong inflation really lit a fire under gold, especially. So first we saw the gold price go and rally all the way to 2000. When you have that kind of a move, then all of a sudden there's a lot of interest, not just in the production of gold, but the search for new gold supplies, silver, palladium, platinum, the precious metals, which are really classic stores of value. So the idea behind the relationship between inflation and gold is, it's not simple, but to put it as simply as I can, if the value of a dollar goes down, then the cost of gold goes up. So gold stays the same, but the amount of dollars required to buy some gold increases because of inflation. So all of a sudden, when we were seeing projects that weren't quite economic at the $1,100 to $1,400 gold mark, all of a sudden more projects become economic and you start to see more money flowing into the space. So from spring into early fall, we had just resurgence in financings for junior gold companies. It was great. A lot of great projects got off the ground. A lot of drills got running again. A lot of people got employed again. The northern parts of all the provinces are seeing a resurgence of economic activity, and that's all because investor dollars are flowing into that space. I don't know if there's competition necessarily between other small cap spaces. Obviously, we saw the psychedelics market really flourish this year. Biotech, wellness, alternative foods. There's been so many places to put your money that's been working. Mining has not suffered because of it. In fact, I would say that a rising tide lifts all boats, and the excitement around the small cap space in general has been really positive. Gold hit that high of 2000, since has drifted back to the 1800 level. I've definitely noticed in the last 3 or 4 months a little bit of a slowdown on the gold financings, but in its place, we've had the base metals really start to rally, specifically copper. And it's not even so much the price of copper that's rallied, although it's done well. It's that this thesis has arisen that the electrification of infrastructure around the world, the development of electric cars that are usable and getting market share, is going to require vast amounts of copper, lithium, rare earths, different metals that that don't have a store of value but actually have a functional use. So we've really seen, especially in the copper market, some better valuations and a lot of financings come through.
And so when you talk about kind of the the flow of which commodities have kind of gone up or down throughout this process. When you look at the investment opportunities and you're talking to a client, for example, this is where we're going to dive into your financial planning brain. The thing I really like about the mining space that has always been an opportunity for the investment side is that you can invest in senior and junior stocks, right? That are all tied to the same type of commodity. Is that something that you practice as kind of, if you want to have a rounded, mining portfolio, that you kind of do different tiers of the seniority of the companies?
Yeah, when it comes to longer term wealth management, I don't really suggest to clients buying highly speculative mining stocks juniors, although it has happened when, and maybe I'll cover this in a little bit, but the idea of early cash flow is kind of in vogue in the space over the last year, I'd say. But typically what I'll do is I'll build a little ladder. So I do believe that gold and precious metals are an essential part of a portfolio right now. You can go and buy an ETF that will cover either global gold or Canadian gold producers. You can buy ETFs that cover physical gold. I like to just build a little ladder. So you have a senior producer, for example, a senior streaming company or royalty company, a mid-tier or junior producer, silver producer, and then some physical gold. And if you pick the right companies, then hopefully you'll do better than the general sector. And then, like I was saying, in the junior space, I've seen a lot of creativity, and this is something that I think comes from experienced management, which to me is something you really need to dive into when you're looking at these companies. Who are the management? What is their track record? Have they had success in the past? And when you have men and women who have had success in the past and know how to raise money in the capital markets, you'll start seeing creativity. So, for example, a company that maybe will have a stockpile from an old existing mine that they'll be developing to fund part of the exploration, and they'll also raise it, but it'll create some cash flow early, and that really de-risks what typically can be a very risky play. It can provide a little bit of cushion or a little bit of protection.
We had the opportunity at the end of last year to create a program called Mining Over Canada. And we traveled across the country virtually over a 6-week period and visited many of our issuers, CSE issuers on site, and got to see just what you were talking about. Kind of, there was so much creativity in how they could work as cost efficiently as possible with the capital given by their shareholders. And I was so impressed by how unique every team was, and the expertise that they brought into the space was kind of amazing. And I really would encourage people, I think, under this world that we live in right now, all being stuck in our home, I was especially impressed with the fact that these companies are putting themselves online. They're getting drone footage, they're getting their geologists out there, they're getting their CEO out there, they're doing virtual AGMs, which gives you as a shareholder the opportunity to go and participate. So I encourage people to go and check out the companies online. I know back in the day, the mining websites, the Vancouver mining websites were, that was a big part of the thing, but they were very stagnant. They just put their new press release, and now we're living in a much different reality.
There was just something you touched on, which was actually, I'd written some notes on what to look for in management. And one of the things I had noted was how to stretch a dollar. And I think the point that we're at in the cycle, you're seeing just very good conservative management of funds and a lot of respect for the funds. That's the type of thing you really want to watch out for later in the cycle, as it gets really easy to raise money. That management doesn't start getting a little spendthrift and making those dollars fly out the door a little bit faster. I just wanted to point out that we're thinking along the same lines there.
Yeah, okay, so I want to ask you one question before we're actually going to talk about a little bit about due diligence, some things that you look for in companies. We're going to get there, but before we do, can you just talk a little bit, you had mentioned royalties, and I think that's an important element if you're looking to invest in the space in general, to understand what is a royalty company.
Yeah, so a royalty or a stream, and there is a difference, but it's very, it's technical and not necessary to go into. Essentially, there's companies that raise capital and then they make an investment into a junior exploration or typically a development project. So they help fund the development of mine in exchange for a royalty on the revenue produced or per ounce, for example, that comes out of the ground. So the idea there is you have less operational risk because the company themselves isn't operating the mine. You're getting in, I'd say, a pretty good value if you're giving money when they really need it, instead of going to the bank or instead of raising capital. So there's no shareholder dilution. You're able to give in some money to companies that require it and take back just a straight percentage of what they produce.
Yeah, and that's, I mean, it's another way, if you're looking to build the pieces of maybe a bit of a mining portfolio, it's definitely one to look at. And I know there's been some great success from some of those. Let's talk about due diligence. And this is something that I feel it's so important that people talk to professionals if they want to get into kind of some riskier investments that are a bit more speculative, just because we need people like you, the experts, to help walk us through this. But what are some general themes when you're looking at your due diligence? When you're looking at a project to potentially put your clients into, what are some of the main check boxes that you look at to see if a company's worth it or not?
Sure. Well, I will skip completely the geology. Geology is a science. It is extremely complicated. You either know about it or you don't. If you don't know about it, you have to be very careful getting into any mining deal, because if you don't understand what they're actually looking at, that could be a problem as an investor. Again, another reason to come to an investment advisor is someone who can look at a mining story and translate that geological gobbledygook into something that's like, how many dollars are you going to get out of this company eventually? Our focus as investment advisors is on client return. So one of the things that we can look at, and one of the things I start with, is the story itself. Is this something that I can put into an email to my clients and explain easily? Is there something to follow? And I find that if I can do that, if I can understand the story and translate it for my clients, that means other retail investors or other non-expert investors are going to get into the story, and they can put their money in as well, and that should bode well for stock price. That ability comes from management, or management hires the right people. There's really two jobs to running a mining company, as you probably noticed by now. One is mining and the other is raising money. So there's great projects that have died because management just couldn't raise the money to keep it going. And there's bad projects that have done way better than they should because management can really tell a story. I'm not going to say which, obviously our goal is to make money. So there's been times where we've invested in a company where we are pretty sure that this mine is never going to get built. But we know that management is going to tell a great story and be able to entice more investors down the line.
Well, and I'll stop you there. I mean, one thing I have noticed, the really successful, especially the junior guys in exploration, has always consisted of a really good technical team and a really good capital markets team. If it's too heavy set on the technical team, they trip over themselves a little bit. And then same in the capital markets team, they might have the ability to raise capital really well, but they're only going to be able to do it once or twice if they can't follow through on the technical side. So it really is a marriage. And I found the ones that I've seen the most successful have that really perfect, relationship between the two sides.
Yeah, and these are small teams typically. It might be 3 or 4 people. Maybe they'll have a bigger advisory board or a strategic board. Strategic investors who come along to help tell the story. But anybody in the group can be the storyteller, and anybody in the group can be the one actually making the plan. So you might have a really amazing vice president of exploration. You might have a really amazing country manager. But if you don't have someone to tell that story and get investors excited, then it's not going to go anywhere. So for me, that's the first thing, is just, who's telling the story, and is it a story that I think is going to get some traction? Then the next thing as an investor I want to look for is, I want to have an idea of time frame and an idea of news flow. So if you're putting a lot of money into a company where there's going to be a lot of operational challenges or complexities, it could be a year, 2 years, 3 years before you see any news that's going to move the stock. One thing we see in the small cap world is a lack of activity is going to depress the stock price. I mean, people are going to find other places to put their money. There's always competition for those dollars. So if you're not kind of always exciting the market, or at least regularly exciting the market, you'll see the share price suffer. So we want to look for a company that can really understand that, that has a near-term plan to excite the market. One thing that I've seen this cycle, which is brand new, I think everywhere, is ESG, and you're seeing a lot of companies kind of put, some are very much just one page of the deck towards what their ESG focus is. Some are, geared entirely around ESG. That could be anything from, we have wind generation nearby, or we have solar generation nearby, so you've got cleaner power. It could be we've got a great relationship with the community and that kind of social aspect. So that's something that I think I've seen. I don't know that that's enticing investors at this point in our book for sure. But when we get to the point where a broader swath of investors is looking at the mining space, I think that'll be really something that might set apart one company from another and might create a bit of a premium for some companies.
I don't think you can discount, the next generation of investor coming to market. They demand it. I mean, from Mining Over Canada, the conversations I had with people, they said it is a question that gets asked way more today than it ever has been before. What's your relationships with any, Aboriginal or First Nation groups within your area? What ESG practices do you have in place? What health and safety practices do you have in place? What diversity do you have within? I mean, these are questions that more than ever, they do mean something, which is trend in the right direction, I think.
I agree. And I think mining executives, miners in general tend to skew a little bit older. We've had a long period where, the investment capital wasn't there, but we're starting to see some younger people come into the industry and get excited. And it's such an exciting type of investment. I mean, you're digging for gold. It's not much more exciting than that. Like, you hit gold, great, you make money. So yes, as we see more young people, the millennials and Gen Z come in to the space, we'll definitely see more of an emphasis on that. But also in the US, mining investment as a percentage of overall investment in the US is a fraction of what it is on average. Canada, we're so close to the industry, Australia too, we see early excitement about it. But when the US really starts getting into it, and when US retail really starts getting into it, that's when we really see the pop up. Yeah, it'll be fun. And I definitely think ESG at that point will become a differentiating factor.
Totally.
One thing I kind of wanted to touch on, I always find this one interesting, which we call it Closeology. So you see it very often in decks. Our property is adjacent to this bigger company's property, or this producing mine's property. And there are times when that's used as kind of a crutch, and there's not much more to it. So you have to look a little deeper. That's one thing I would just love to point out. You want to look at, on a geological scale, is this property on trend? Is there a realistic expectation that whatever deposit is on the bigger company's property is going to extend into the smaller company's property? You want to look at the history of that bigger company and see, do they do joint ventures with smaller companies? Do they have a history of buying out, other companies next door? Is there a reason why they're doing it other than just to, create that correlation in people's head? But I've seen some really, there's always exciting stories where, we'll see company X, the small one, will be right next to company A. Company A's deposit goes right up until, the border between the two properties, and we just have to prove that it continues. And, those are so fun, because that's like we drill once, and if we hit it, everyone's happy, and if we miss it, then we move on to the next thing.
I love that. That's such a great takeaway for me anyway, is jointology. Is that an actual term in the sector, or is that an Anthony Sandler term?
I mean, I didn't make it up. I've heard it from enough people, but
Crossology?
Closeology.
Closeology.
Yes.
took me 3 times. Closeology, I love that, because you know what? I don't know if I've ever talked to a junior exploration company without them telling me who's their neighbor. And I think that's a really good point. I always took it as a value, but I think actually questioning, you know, like you said, is this company known to engage with smaller companies? Would it even be a possibility? Or what's the, you know, I think that's a great point to bring up. You know, take it the next step and find out what that might actually mean.
And I learned that the hard way, because I still own a particular stock, which I bought solely because it was right next to another large operator. And it was like, the guy who told me, it's imminent. They're going to take it over. It's imminent. Yeah, well, 10 years later, I'm still sitting on this worthless stock, but these things happen. One other thing, though, that does happen is you've got access to a workforce. So in a mining area where there is a lot of mining going on, you have a lot of really good workers who can bring their experience to your project. And then there's also economies of scale. So if a bigger company has a mill, for example, does that lower the capital cost required to develop the junior company's mine into production? So, you know, there is some just general, you know, positivity from the Closeology, but just be careful that you're not just being sold the idea of it as opposed to a reality.
And the infrastructure, right? There might be roads and electricity and all of that stuff. Listen, I can't thank you enough. This has been so much helpful information. Is there anything that you wanted to end off on? We're kind of running out of our time here, but is there anything else that you wanted to end off before we close for the day?
You know, I could honestly talk about it for, as you know, for a long time. So I'll cut myself off too. I will just say that it's a fun time in the small cap market right now. Canada has a strong history of mining success. And this is a good time to get in because the valuations still aren't obscene or out of whack. And I think there's a lot of growth to come in the few years ahead.
I will say to our audience, over the years, Anthony has become one of my favorite people to reach out to when I'm not sure what's going on in the markets, and to get a little clarity and see how his mind's thinking about it. So I encourage you to reach out and connect with him. And if you want his information, feel free to reach out to me. Anthony, thank you again for joining us today. We'll be doing more talks like this year with Anthony. So make sure that you subscribe to our YouTube page and stay tuned.
I look forward to it, Anna.
Thank you again.